course will change the way you think about many things in your life, and you will notice this by yourself later. So let's start, if you want, with the definition, the meaning of finance. What is finance? Finance is simply the study of the art and the science of managing money. Finance will allow us to understand how to get money and how to use the money. There are two factors that make finance challenging and interesting, if you want. These factors are the time and the risk. Because of time, the value of a cash flow of an amount of money today is different from the value of this amount if we get it later. So according to this principle of time value of money, the value of money may vary over time. And today we will see why the value of money may vary over time and the application of this principle of time value of money. The second factor is the risk. And because of it, a dollar today without risk means a certain dollar today is not the same as a dollar today with risk. And we will come back to this factor later. We will see how to assess or to measure the risk, how the risk affects the decisions, and how to manage it, if you want. These two factors, the time and the risk, affect all the business decisions. And all the business decisions involve two functions. The valuation of assets, the estimation of the correct value of an asset. It could be a company, a stock, a bond, any other financial asset, and the management of the asset. And all our course, all the financial course, if you want, would turn around these two functions: how to evaluate assets and how to manage the assets. At the end of this course, you should be able to analyze the time value of money and to apply this principle of time value of money to the loan amortization techniques. You should be able to evaluate cash flows in relation with the investments. When we say cash flow, means what we invest today, for example, and what this investment will generate in the future. You will be able to evaluate it with these cash flows and to apply the basic tools of deciding whether to accept or no a project. We call it in finance the capital budgeting. Also, at the end of the course, you should be able to describe and apply the basic equity valuation models. You will be able to describe the features of equities, of stocks, the different categories of stocks, and how to estimate the value of a stock in the market. Also, you should be able to evaluate fixed income securities, and here we are talking about bonds, which represents an owner's a debt instrument, if you want, because you know that a company, when it decides to invest, it requires funds to be able to finance the investments. We have different sources of funds that the company will use. It can use the equity, available equity, or it can borrow money from a bank or other financial institutions, or it can borrow money from the financial market, from individuals, other companies, some banks in the market. In this case, the company has to sell a paper called bond, which simply will set the interest rate at which the company will borrow the money from the individuals, and what the maturity and when the company will reimburse the money borrowed, etc. We call it a bond, and we'll come back to this financial security later. Also, you should be able to apply the basics of financial statement analysis. You should be able to analyze the financial situation of the company based on the available financial statements like the income statement and the balance sheet of the company. This is why you should have validated your financial accounting course to be able to add this the principles of finance course. We'll cover, inshallah, 7 chapters. We will start the first one today, the time value of money. The first chapter for me is the most important one. This chapter will allow us to understand the logic of finance, the logic of the investment. And once we master these techniques, the mathematics of calculating the interests, the future values, the present values, etc., we will apply this principle of time value of money to many things in finance. The first thing that we will cover is the loan amortization. We will try to understand how to compute the different payments when we borrow money from the bank, the different ways of reimbursing a loan, etc. Then we will apply this principle of time value of money to the capital budgeting decision, the investment decision in the chapter 2. After understanding how to estimate the different cash flows, means the investment flows and the inflows in relation with the project, we should decide, we'll understand and know how to decide whether to accept or not a particular project. Here we have to apply some, if you want, measures that will help us to decide or to say whether the project will be profitable or no. We call them the capital budgeting criteria. These capital budgeting criteria are based on the principle of time value of money. This is why it is important to master the different principles in the chapter 1. Then we will use also these principles of time value of money to estimate the value of a stock. The stock represents an ownership in the corporation. We will see the different categories of stocks and how to estimate the value of the stock. The same thing will be applied to the bonds, as I explained before. We see the different categories of bonds, the features of bonds, and how to estimate the value of the bond and your return, your gain, if you buy a bond from a company, if you invest your money, if you lend, if you want your money in a company, to a company. Then we will try to come back to the interest rates covered in the chapter 1 to understand better with more details the determinants of the interest rate. We call it the yield to maturity, determinants of the yield to maturity. What are the components of the interest rates, how the interest rates are set. Then we will move to a chapter concerning the risk of the bond, the sensitivity of the bond. We will see the meaning of the duration and the convexity, what they do represent, how to compute them, and what is the utility of these two metrics. The last chapter will cover, as I said, the financial statement analysis of the company, how to use the income statement, how to use the balance sheet of the company to analyze its performance, its liquidity position, the efficiency of the use of the assets of the company, the leverage of the company, etc. these are the 7 chapters that we'll try to cover, inshallah. If we have enough time, we can add a last chapter that concerns the risk and the return, how to measure the different measures of the return and the risk, which is covered in general in the portfolio management course, in the junior. If we have time to cover it, we'll do it. سنخليها للportfolio management. Now, the required materials here you have then different textbooks if you want, but we will have at the beginning of each chapter the slides that we will use. The slides ماهمش من textbook واحد، يجمع من different textbooks. You will have the slides. You will find all the slides and the materials on my website. I will put the link to my website in the comment. If you want, I can show you how to get the slides and the tutorials later. يا جماعة بربي لمن عادي